Good morning. It is now 11 o'clock Pacific Standard Time, and what we are going to feature here is the VIX. So it's a fear indicator, and this is a 60-minute chart. I'm going to populate how we had put in the bottom here, and when the VIX goes up in value, stocks sell off. When the VIX goes down in value, stocks go up. On this 60-minute chart right here, these are 60-minute bars and they're ascending. They gapped the fear indicator up on the open today. They pulled it back to the support level. And this is a 60-minute chart, and each one of these lines are 26 cents per line. We are now back up here at 20.5. That means that the broader equity markets like the Dow Jones down 140, the Nasdaq down 34, Nasdaq 100 down 32, but most importantly, the S&P 500 is down 15 points. So, when that S&P is falling in value down to our support level at 1403 on the S&P, this is where the fear indicator rises. And that's why the broader index, as I'm showing down here on the S&P, right here is down 15.84 or negative 1.12% in our system here at that support level that I had updated. So when the fear indicator rises, stocks sell off. Now, there are call strategies that we were looking at here, and we did this before using the 17 calls. So when that VIX goes higher, you can buy the calls here in January, and we did that. You can buy the $20 calls. They were very cheap when they were at the bottom. Okay, when the VIX falls in value, you can buy puts. So when the VIX goes down, you can buy puts. So when fear rises, uncertainty is at its fullest level. Okay, but you can use the call and options calls for the VIX to go higher and puts when the VIX goes lower. Now, having said that, let's go back to the 60-minute chart. We can clearly see that this is a very strong move today. Each line is 26 cents. We've gone up over one delta, which is a big move. And the thing about it is, it's a measure of fear. This is where that support level was when it started to take off and the diamonds were going up. Then the diamonds came back at support and they're ascending in value. These are 60-minute diamond bars now, and they're going up. And they, they gap up. Stocks, when this gapped up, stocks were hitting bottoms on the open, and stocks came off their bottom, and this went down. Once stocks made their high at resistance levels, they sold off, and we went straight up 60 minutes over the last couple of days. And here is today, right here, December 27th is in here. So we can see going back different days of what this looks like, because there were some holidays involved there. So basically what I'd like people to know is how to gauge fear using the volatility index, the VIX. And today is 1227, and the high is 2055, and the low is 20.44 in this current bar right here. So you can see that when we stay up here at these highs, stocks are going to be extremely weak in the S&P, and that fear is building because of the fiscal cliff. We have training around how to use this fear indicator. There are many other fear indicators that can be used to gauge markets. You're welcome to inquire at stockmarketfunding.com. How do I apply this to equities going long or short, and why markets sell down or go higher? But when this goes higher, markets are selling off. And when it goes lower, like this, it pulled back and held that teeny support, stocks were moving higher. But then look what happened over the last, from the 24th, New Year's Eve. This thing hit a bottom. It started to go up higher all the way through here. And we've consolidated in the fear indicator. How do I apply the fear indicator? We're willing to teach you that. Once again, update on the VIX 60-minute chart.